So Kevin, what is PXP Vietnam Asset Management?
Well, I moved to Vietnam in August 2002, set up what became PXP Vietnam Asset Management with my former partner. Prior to this, I'd spent 10 years in Hong Kong, initially as an analyst, then as a proprietary trader, working for a slew of international investment banks. I then moved to the UK, back to the UK in 1995. Spent 7 years there before coming to Vietnam, but trading essentially global emerging markets. And Vietnam Stock Exchange opened in July 2000. I came here in early 2001 for a look, because we were starting to see some interest, some client interest where I was working at the time, which was ABN AMRO. So I came over to have a look. Thought that it was an interesting, fascinating country. Decided that now that it had a stock market, eventually it would figure out what it's for, and I think they did that about a year ago. And so we've been here essentially since 3.5 years into the market, or managing money since 3.5 years into the market. When we started managing PXP Vietnam Fund on the 31st of December 2003, there were 22 listed stocks. Total market capitalization was about $160 million, and we turned over the princely amount of roughly $75,000 a day for the 1 hour a day that the market was open on Monday, Wednesdays and Fridays. So 15 years down the road, we now have 3 markets. Total market cap is $160 billion, and we turn over in total about for just under $400 million a day. So it's been a fairly dramatic increase, but really most of that has happened in the last year or two, because we went through an initial phase where the world decided that it liked Vietnam when it was tiny, then obviously ran into the global financial crisis, and everybody went away for about 8 or 9 years, and now they're back with a vengeance, and the market is sufficiently large to accommodate the bigger institutions in the world. So that's what's making it, continues to make it more interesting.
And what is your investment process and philosophy?
We are ultra high conviction long-term investors, fundamentally research driven. As I say, we've been here since the market only had 22 listed stocks. So as the market has developed, so has the company developed. So we've built out a fairly broad range of coverage of the market. I mean, we cover about 145 companies, representing in excess of 90% of market capitalization, which means that we cover more companies than anybody else. Because we've known the companies as long as we have very good relationships with the companies that have been in our portfolio, in some cases, as I say, for up to 15 years. And so in terms of the process, what we're trying to achieve is to build portfolios consisting of the best available companies in Vietnam on a qualitative look from a long-term perspective. And that involves us starting with, obviously, financials, ideas generated across the research and investment teams. We build a financial model, place the company within its industry, within its peer group. And before we invest, we'd like to ensure that, in fact, we never invest unless we've met management, because we like to sit down and try and get a view as to whether we trust them, whether they consider that having outside investors is a positive fact for them. And we have seen over the years that a lot of companies that have, for some reason, been listed don't actually want to meet investors. And if we can't meet the company, if we're not comfortable with their level of transparency and corporate governance, then we don't invest. And there is nothing that we have to invest in, because we're small enough to stay under the radar, essentially.
And Kevin, what are some of your immediate priorities?
Well, we have about $165 million under management at the moment. We do have capacity for roughly $500 million, which would be, given the relative size and liquidity of the market at the moment, I think big enough for us, given our investment style. And so really it's to continue to deliver performance to our existing investors, and if that attracts further investors, then all well and good. But having a group of happy shareholders is much preferable to having a large number of people who decided that coming in at the top was the sensible thing to do, and we certainly saw a lot of that back in 2007, which made the ensuing few years rather unpleasant. But the shareholder base that we have at the moment has been with us for 5 or 6 years, during which our performance has been relatively decent. So we currently certainly have a group of relatively happy shareholders, and so as long as we're able to continue in that vein, we're happy to turn the money that we manage into more money, rather than necessarily going out and just continually trying to raise money from new investors.
And Kevin, are there any new investors that you would like to reach, and how would you potentially do that?
Right, well, certainly we would like to manage more money. We have so far managed it relatively well, and we hope to continue to be able to do that. But because of our structure, because we're a Cayman Islands domiciled mutual fund, that tends to restrict the potential investor pool. So, for example, we don't market in Europe except for in the UK and in Switzerland. In Asia, our focus has been on Singapore and Hong Kong, but our major thrust, if you like, at the moment is the US, because we're starting to see a lot more interest there. We've recently appointed third-party marketers who are certainly improving our reach into the US. We have a new head of marketing starting in a couple of weeks' time, which will hopefully take some of the stress of that off of, or some of the strain of that off of my plate, if that's not a terribly mixed metaphor. But I think, the main area of focus, I think, certainly for the next 6 months or so, will be into the US, because the structure suits them, and it's a relatively new market for them. So, the more time we spend speaking to people in the US, hopefully our reach is improved, and the product, as I say, is one that is suitable for them, because we're not keen on managing a UCITS fund. As I've said, we are very high conviction, and we don't really like the concentration limits of a UCITS fund, nor the fact that the liquidity ratio of generally daily liquidity is not really suitable to our management style either.